you ideally don't want to be raising money when you're in a low point in your business. The best time to raise money is when you're already on a reasonable trajectory. So typically, I like to raise money when we've already figured out some of our big bottlenecks, some of our hurdles, and we can already show some promise. So now, once we go to let's say angel investors, or let's say more structured investors or capital providers, then we can show a trajectory or a path of growth that we're already on. And now the willingness for them to invest is going to be much more, their appetite will be higher, and the potential valuation that they'll give you equity on will be higher, and the type of loan amounts that they'll be able to give you would be potentially higher. So that's one of the key parameters. I rarely like to raise money when you're in a very difficult spot.
Hi, I'm Zorina Dimitrova, and welcome to the Grow and Learn podcast. Here I host thought leaders on business growth, transformation, leadership, and succeeding in life and business with a human focus. At Grow and Learn, we are the only ones offering uniquely customized solutions to business needs using a cutting-edge AI business growth assessment tool and a global network of top-tier experts to craft and execute strategies that drive impactful results. If you're ready to grow smarter, book a call today at growandlearn.org and let's transform your business together. Enjoy this episode. Yet another wonderful and exciting topic and a very experienced guest I am bringing to you today. I'm speaking to Ashish Gupta, CEO of Scale Up Exec. We're going to be talking about the fractional functions of COOs, CXOs, anything we need to talk about regarding scaling up ventures. Welcome, Ashish. Great to have you.
Yeah, thanks, Serena. Really happy to be here.
My pleasure. What's your story, Ashish? You're based in San Francisco.
I was in actually Los Angeles for the last 5 years. Just recently moved to the countryside in Virginia, so night and day. Now, before my neighbors I had lots of neighbors, and hospital was right next door. Now my neighbors are cows, so it's a bit of a different environment.
Fantastic.
Yeah.
Yeah.
Briefly, in terms of my background, I've been in tech most of my career. I was previously the co-founder of a wireless company, built it up, eventually was acquired by a Fortune 500, Qualcomm. After that, I was in Apple, managed a $2 billion a year budget and a pretty sizable operations team around manufacturing, supply chain. And eventually, I had the entrepreneurial bug again. I quit Apple. I acquired a distressed e-commerce business and spent 4 years, 4 very painful years in turning it around.
Was this
It did turn
around
around.
the COVID era or
Yeah,
before?
it was through
Yeah.
COVID and a little after. And then it was eventually acquired in April of now just the year before last, so 2023. And after that, I had the chance to help a couple of small, medium-sized businesses where their founders were stuck. The revenues had plateaued of the businesses, the teams were burnt out, and they really needed help to get back on track. And so I jumped in as a fractional COO myself and spent 3, 4 months in retuning every aspect of the business. And eventually, within 3, 4 months of businesses, their revenues grew 30, 40%. And with that success, I ended up having more engagements than I could handle myself. And so in early of last year, early of 2024, I started building out a team of who I found to be the top COOs after having met hundreds of them through the years. And so we have a small team now, about 7, 8 of us, that dive into all kinds of different contexts and different industries and different small, medium-sized businesses to help them hands-on with getting onto a path of scaling.
Mm-hmm. And do you have a specific strategy that you follow to approach a business, or do you look at them on a individual basis? How do you decide what to tackle first when you take on a project?
Yeah, that's a good question. Actually, I'm a big fan of not having a one-size-fits-all solution to anything because I found, firstly, every founder or entrepreneur is so unique. Their own vision or goals are unique. Like, for example, some founders, their interest is to grow their business. And other founders, their interest is to sustain their business, not necessarily grow it, but to have it be maybe profitable and consistent and require less of their time. So firstly, every founder or entrepreneur has a unique vision for what they want in their business. And then secondly, every business is unique in its current situation. So, for example, many of our customers come to us when they're in existential crisis mode,
Mhm.
like their market has changed dramatically, their team members have changed dramatically, or there's like something that's really preventing them from potentially remaining as an ongoing business. And so they need expert help to come in and help them get on track. And so we come in and dive in into all the different areas, whether on the cost side, on revenue growth side, or on the team culture, or team systems and operations, and we retweak and retune to get it back on track. And other situations, businesses are already in a path of growth and scaling, and now they need to right size their team or bring or upskill their team to what's needed to get to the next level of growth. And so we dive in figuring out what are the gaps currently that exist, whether in the revenue, costs, or team or culture, and then how do we fill in those gaps so that we can actually achieve the vision of the founders or entrepreneurs. So that way it's very unique, and I could probably dive into examples in all kinds of different cases. So uh, happy to dive in deeper.
Yeah, I'd love to talk about the financing aspect of companies because, as we know, most company or startups fail because of financing. I mean, there are different studies. Some say because of team incoherence, because of financing, different. But generally speaking, financing is a major issue, and I've been working on selling a few companies that have gone through such a phase where they've cut to the bone and they need to raise financing, and that's practically the only way out. Have you worked with any of these cases, and what's your approach there? The reason I'm asking this is because the only company that can potentially hire CXO is a company that has cash flow, that has something, right? If they've managed to deplete themselves completely. Uh, have you worked with such cases?
Oh yeah, we've many of our engagements, they're in like their last bits of like for example, one of our engagements, they there are about 150 people in the team.
Mhm.
They've been around for 15 years, and they also were in existential crisis mode. So they had up until us joining, they'd been losing 350K a month for 18 months in a
Mhm.
row,
Yeah,
and they had a full-time COO already in their team,
yeah.
and they weren't able to navigate how to get back on track. And part of this was because as interest rates had risen, then their customers had started reducing their spend on capital infrastructure, and they were in the capital infrastructure business. So it was a very tough situation. They didn't know how to navigate and how to get back into a path of growth. And by the time we had come in, they had already run out of cash. They were tapping into their line of credit, and they had a $2 million line of credit, and they were maybe a few months away from even tapping out of that. So it's a very dire situation. And when we joined in, we first joined in on a 1 hour a day plan. So a very small engagement. Within the first three weeks of us joining, they saw the value that we had, and they let go of their. And this is not something that I would wish for anybody, any business, but they saw the value we had, and within 3 weeks, let go of their full-time COO, increased us to three hours a day. So still very much a part-time situation. But within the first 3 months of working with them, we got them to net zero, and then thereafter they were having their first months of profit. And so their business up till now, we're still engaged there as a fractional COO. And in fact, now we even have had multiple team members working there on the chief revenue side, a chief revenue officer side as well, and many other contexts, because the value that we've been able to provide. And as a point of reference, up till now, we've not lost a single customer since we've started, because the value that we're able to provide, even when they're in very dire financial situations, outweighs the costs that we have. So we're very aware. Like, let's say in that case, the financial situation was very tight. They had very little money to spend, but the CEO was willing to take a bet that in order to save my business, I think it's worth it for me to try having somebody who potentially might have experience to help me get out of it. And very quickly, when we dived in, we one of the first things is when you're in a dire situation like that, looking at ways to grow your revenue is secondary. that's not the first thing to focus on. That takes time. To grow your revenue can usually take time. So oftentimes, what's most important is to focus on where we can reduce costs in ways that are smart without impacting the business negatively. So in that case, we dived into every aspect of the cost structure from the team, everybody's roles and responsibilities on the expenses that they had on software equipment and whatever assets they had on the books that were actually being used or not being used, and seeing what we could quickly adjust without having an impact on the revenue side of the business. Sometimes if you make cuts in the wrong places, it could actually negatively impact your revenue side as well. So you have to be very strategic and move very fast. So in that case, every day was worth $10,000, or more. So every day we didn't make a difference, we were losing an extra $10,000. So, like we were very fast in making bold decisions. And that's also, again, not something that I would wish for any company where you have to let go of a whole bunch of people, you have to sell off a bunch of assets very quickly. But if it's done appropriately, uh, uh, it can actually make the difference that's needed to your business being sustained or dying.
Mhm. I see. Yeah. And in the meantime, are you also helping them bridge gaps with financing, or are you focused more on the operational side?
Yeah, for every situation, it's different. So
Fine.
in that case, it was very tough for them to get more financing
Mhm.
because they've kind of tapped out their credit. They've already gotten a line of credit. So the other option would be to raise equity. But when you have a business that has it's
Mm.
like on the last stages
That's
and
very.
there's no clear path yet to raise more money, then nobody's going to want to give equity money into a venture like that. The other option is potentially selling off in that case, we actually just sold off a bunch of physical assets that they had very quickly so we could at least raise some cash. So, there are multiple paths of raising money. It doesn't necessarily have to be going after debt or going after equity raises. It can also be, well, what assets do I have in my books that I could liquidate very quickly and get some free cash flow from that? Are there things that I could do in my cost structure to help ease my burden on how much money I'm spending? And then we can also look at other ways of, like, for example, my accounts receivable. Can I change some of my contracts with some of my customers so they start paying me sooner?
Mhm.
And so if I have money sooner, then I can hopefully meet my bills a bit more easily. So, there are many different ways of financing. You don't always have to look, like, for example, one of our another engagement that we have, they've got a bunch of accounts uh, receivable that customers haven't paid for like over 6 months.
Mhm.
And their business is also in a dire situation. I mean, not all of our engagements are dire situations, but many of them happen to be. So it's a bit like we're moving like at the speed of light, in each of them because every day matters. So in that case, that now we're doing a whole bunch of effort to see how can we build relationships with the right people in those customers, in the different departments in those customers. How do we move very quickly in securing the money that's due to us? And this was across multiple customers of theirs that are very delayed in making payments. And so it's very hard for this business to pay their bills and pay their suppliers. So in that case, even there, raising money is very tough in that situation because you ideally don't want to be raising money when you're in a low point in your business. The best time to raise money is when you're already on a reasonable trajectory. So typically, I like to raise money when we've already figured out some of our big bottlenecks, some of our hurdles, and we can already show some promise. So now, once we go to let's say angel investors or let's say more structured investors or capital providers, then we can show a trajectory or a path of growth that we're already on. And now the willingness for them to invest is going to be much more their appetite will be higher and the potential valuation that they'll give you equity on will be higher and the type of loan amounts that they'll be able to give you would be potentially higher. So that's one of the key parameters. I rarely like to raise money when you're in a very difficult spot.
Yeah. What would you say is the typical profile of the companies that approach? Is there a specific industry that they're more inclined to take on a fractional COO?
Yeah, good question. So firstly, we're industry agnostic. So right now our customers are in all over the place. They're in e-commerce, CPG, they're in SaaS businesses, tech businesses. They're also in traditional businesses, like we have multiple in construction. We have in commercial real estate, investment firms, even event management companies, medical practices, charter schools. So we're like in all different industries. And I've actually found that uh, if you're in a tech industry, it's a bit sexier and it's a bit easier for you to find top tier talent. When you're in a traditional industry, let's say medical practice or maybe construction or real estate or some of these other areas, finding top tier talent, if your size of the business is maybe 1 to 20 million a year in revenue, it's tough to get access to really top tier talent. And so that's where a company like ours can fill in a gap where my team is really the people who've scaled businesses again and again from 0 to 8, 9 figures, gotten them to exit points. They've been able to navigate all kinds of difficult situations. And so this type of talent typically also would not want to go and work in a traditional business that's just 1 or 5 or 10 or 20 million a year revenue. But when they work fractionally across 3 or 4 different engagements, now the excitement level is more interesting for them because now they can bring a lot of impact for multiple businesses very quickly. And compensation wise, it also makes sense for them once they start working for multiple businesses. So in terms of industry, we're industry agnostic. In terms of business size, our smallest customers are like 1 million a year revenue, or they've raised 1 million if they're pre-revenue. And the largest is about 25 million in revenue. And in terms of number of employees, the smallest customers we have are 4 or 5 employees in the team. And the largest is like 200 employees in the team. We also have some contexts where there's a full-time COO already in place,
Mhm.
but that CEO either is tapped out in terms of time, or there's certain areas that they don't have a skill set in. And so we come in and supplement and help them in the areas that there are gaps.
Yeah. And you mentioned with the distress company that you're giving an example of that initially you joined for 1 hour a day. Is such a short period engagement effective?
Uh, well, in that case, that 1 hour day turned to 3 hours, then we were able to turn that business around from negative 350K a month over the last 18 months to net zero in 3 months. So I guess from the data points we have so
Mhm.
far, yes. And up till now, like I mentioned, we've not lost a single customer because, and several of them are on 1 hour a day plans, and then many of them are on 2, 3, 4 hour a day plans, and even higher. But what happens when you're a fractional COO? That is very skilled. So I guess there's 2 different types of CEOs. There's the ones who I often feel are overqualified to get into a certain situation. And then there's others that are maybe typical skill set. So I find that, and I just like to focus on having team members who are overqualified for pretty much many situations. Because I found when you're overqualified, that means you've gone through a lot, you've seen a lot, you've actually worked through a lot through the years. And when you've had that foundational knowledge now in you. Now, when you approach a new problem that a business is facing, in a shorter period of time, you can make a better decision on how to navigate that. And so, even in 1 hour a day, if you're somebody who's potentially overqualified for solving a business problem, you'll be able to make decisions that are better and make them faster. And so, even in 1 hour a day, you can actually move the needle quite significantly.
Mhm. You mentioned that all of your clients have stayed with you, so it's not a consulting type fractional CEOs for a COO for a particular limited time, but you're actually continuing your engagement with them continuously, right?
Yeah, that's kind of the
After
interesting
turning them
thing.
around.
Yeah, exactly. That's kind of the interesting thing with specifically the role of a COO. Uh, where a COO I find is a bit different than, let's say, a CFO or a CMO. A chief marketing officer has to be really skilled in marketing and maybe sales, but they don't have to be skilled in HR or IT or systems and processes or all these other aspects of a business. And similarly with a CFO, they have to be really good at finance and maybe accounting, but they don't necessarily have to be really skilled at IT, HR, all these other things. But a really good COO has to be good at everything. They have to have led in the past HR teams, sales teams, marketing teams, finance teams, IT team. They should have led everything, all different departments of a business for me to qualify them as a really good COO. So now that means, let's say today, a business is facing a financial crisis, they can dive in deep and roll up their sleeves and actually do the work based on their deep expertise in finance. And then 3 months from now, the business is going to evolve and maybe have a bunch of issues around systems and processes. They'll have expertise there as well. They can dive in and solve that. After that, it might be around culture or hiring practices, or maybe letting go of people, or maybe developing new sales channels or new marketing paths, or maybe implementing a new CRM. So they've worked through all of these different areas in the past. So that means their relevancy will continue as the business evolves and has new needs.
Yeah. Would you mind sharing with us, of course, anonymized, another case that you've worked on, your partners also?
Yep, yep, sure. I have lots of them. So maybe I'll give
Just
you one
pick one.
example. This is a business that is in commercial real estate, and of course, they're still our customer. When they joined in this case, I was actually the fractional COO for this engagement, and I still am. So this company has a CEO founder who's really skilled. Uh, they raise capital for commercial real estate. So let's say if an investor wants to buy a multifamily apartment building, then this firm will raise all the debt and equity for them. So they're capital providers, or they are brokers, or capital brokers. So when I joined them, I realized that I did an audit first in the first month of joining of all the different areas of that business. What are the things that are working really well, and what are the gaps? One of the biggest gaps was that they were reliant on a very small number of customers. So they had a deep customer concentration on just a couple of handful of customers. And up until the point I joined, that was working fine. The customers kept on coming back. They were kept on buying more and more properties that needed money to be raised for them. So it didn't feel like a big issue. But for me, I've seen time and again that if you have customer concentration, at some point, there's a very high risk of your revenue dropping if one or two or three of your customers have some kind of issue that comes up. And so one of the first things I did was figure out how can we expand their sales and marketing channels. So up until then, all of their customers had come in through referral, through personal connections to the founder or referrals to those personal connections. And eventually you're going to tap out of that, especially if your referral circle is small. And in that case, it seemed like his referral circle was small. So the way I like to build out new sales and marketing channels, first you identify your ICP, ideal customer profile, who's the perfect type of customer. Second is you figure out where do those people hang out, whether online or offline places. Where do they hang out? Perhaps they're all in certain conferences. Perhaps they're all on their email. Perhaps they're just on their phones all the time, or perhaps they're on Facebook or Instagram, whatever. So we first figure out where the places. The second we figure out is where do they hang out, the ICP. And then now third is what are potential ways that we could reach these ICP in the places they hang out. And then I like to do a test. So we'll come up with 4 potential channels to reach that ICP in the places they hang out. And then we come up with a few key parameters or metrics to measure, and then do a test for like 1 to 2 months to see which of those 4 channels seem to be reaching the right people at the right time. And we get some positive responses from that. And then once you start seeing that one of those channels is outperforming the rest, you forget about the others and you just dive deep on that one and start investing in that one channel and really scale it out. And so in that case, we found that cold email was working quite well. And so we started scaling that out, and very soon his revenue started expanding. And now I think I've been working with them for about 6, 7 months. Now the revenue has doubled from when I started, and their customer base has expanded beyond that small set of people that they were originally at. And so that was one of the first areas we tackled. But then soon afterwards, I realized that his team and his cost structure, his team was all, he's from New York. He previously worked in Wall Street, and Wall Street is notorious for everybody being in the office together, working crazy hours. And that's what they found success in. And so even his mindset was, well, how could you even have people who are not in the office here? But that means that you have a high cost structure being based in the US. And there are many tasks that I noticed that his team were doing that didn't have to be done by really expensive people here in the US. So I got him open to having a hybrid culture. We started developing hiring processes to bring on offshore people in Latin America to do some of the work that doesn't need to be done by high skill, high paid people here in the US. And eventually he started opening up to it. He became quite excited about it. And then eventually we've now shifted to a fully remote culture. And so even his office he's gotten rid of. And now he has several team members in Latin America and then a few people here in the US that are doing really the high skill, high value stuff. So his cost structure now has decreased. His profit margins have increased dramatically. And he was telling me now, oh, maybe I should go and live in Latin America as well because now I don't have to be bound to my office here in Florida. So it's kind of, fascinating. Like even his life and his perception of what's possible or not possible is changing. His revenue is growing. His team is, um, he has access to more talent now across the world rather than just he was based in Tampa. So rather than this, that small geography of Tampa. So,
Mhm.
like that, I've gone through many different areas, like developing his own leadership skills, developing the leadership skills of his other team members, so that they can start taking over some of the tasks he was doing that shouldn't be done by him. So, like optimizing even the focus of him. I realized also he was spending a lot of time on things that a CEO should not be doing. He was doing not just visionary strategy stuff, but he was also doing a lot of bookkeeping, accounting, and things that are not a useful use of his time. He could easily have somebody else do that. And so we did a whole bunch of work on how to uh, delegate, how to get things off of his plate in a way that there's still accountability that those things are getting done well. So, anyways, I'll pause there. Just talk quite a bit.
Oh,
So
no, fantastic. No,
I
it's very
can dive in.
interesting. So I assume you also work remotely.
Yes, yeah.
Yes.
And I think as a fractional, there's actually kind of two interesting concepts when you're fractionally working in a business for being remote. One is that when you're remote, you're very purposeful with your time. Like,
Mm,
for example, if I go in office uh, and I have 1 hour with a client, in that 1 hour, most likely 10, 15 minutes will be chit-chatting, like water cooler talk. And then 45 minutes will be actually productive work. Versus if I'm remote, everything becomes much more conscious. You're very conscious with your use of time. So let's say even if you are relationship building with somebody and a team, you're consciously doing it. So you might allocate 10 minutes to build a relationship with somebody, but you're not doing it like unconsciously like you might do when you're in person. So, when you're fractional, every minute counts. Every hour that you're working with a client counts, and you have to make sure that you're adding value in every minute and every hour. So that way, that's one concept is that being remote, especially when you're fractional, you can be much more conscious with your time. And the second is if you have three, four different engagements at the same time, it's just physically not possible for you to spend a bunch of time commuting
yeah.
to three, four different places every day or two. So makes your own personal time also much more efficient.
How do you see the future of businesses that are actually any type, be it consultant type or it seems that there's a huge shift to fractional everything, all kinds of leadership roles, and also everything is outsourced. So it seems that the nature of a corporation is now a conglomerate, a concoction of multiple parts put together, but it's not like it used to be like a fixed entity controlling, but it's more like coordination of separate pieces. How do you see things
Yeah.
developing?
Yeah, it is kind of fascinating. And if you look at just the history, first, companies became comfortable with having freelancers to do specific tasks. So, like Upwork and Fiverr and all those marketplaces allowed just
Mhm.
freelancers to come in. And then now, in the last 4 or 5 years, companies have started becoming comfortable with having freelancers at a leadership level. Up till recently, most companies couldn't have thought that a C-suite person works not just in my company, but at the same time is working at three, four other companies.
Yeah.
You would often think that how can a leader, a C-suite, be effective in holding the culture of a big company if they're also holding the culture of three, four other companies at the same time? But now it's been proven that actually it is possible, and it can actually have disproportionate results because you're bringing in the type of talent that otherwise you might not have been able to bring in, given the size of your company or the industry that you're in. So that's kind of interesting. You're exactly right that more the companies are now like hub and spoke model. So you've got a core set of people in the company, and then you spike out to all kinds of different talent. And sometimes you need talent just for a certain time period or certain issues in your business that need to be solved. And so you bring in people who are really deep experts in that area to help you get through that problem. And then maybe you'll have the next set of problems and you'll find another expert to help you in that area. And it's much easier to find experts now that have deep expertise in different areas. So I think that's going to continue evolving. I think the interesting thing will be now leadership skills up till now, I think, have not really been touched by AI. AI is helping people who are doing on the ground execution work in many different areas. But when you need to, let's say somebody in your team is not performing well and you need to motivate them to get onto track or become more effective, there's still like the human aspect that comes in and human experience and expertise to help in that area. Or let's say you need to let go of somebody. You're probably not going to have a AI bot let go of somebody for you. You're going to have like that somebody who's experienced and skilled at that to actually do it in a way that is good for the company and is good for that individual as well. But I'd imagine eventually even AI will start helping leaders become better leaders, and it'll be able to have better context in the situations that will come in and impact how somebody can be really an effective leader. So I think that that'll be kind of interesting to just see how even leadership ends up getting enhanced by AI.
Yeah, it's interesting. I actually, a few months ago, I read somewhere, I can't quote exactly where, that there was an AI sitting on a board. So maybe they complement the overall human capability with the AI capability of leadership, whatever has been learned. Of course, it cannot manage by itself, but as a complementary tool.
Hmm.
Yeah, interesting.
Yeah, fascinating.
Ashish, where can people find you? And is there a way to approach you, try out your services or your team's member services?
Yeah, absolutely. So
Mhm.
first is our website, scaleupexec.com. And secondly, on LinkedIn, I've in the last few months started posting quite a bit about my thoughts on leadership and entrepreneurship. And I've kind of developed some a bit counter ways of what I found to work through a lot of my practical experience. So I just like to share whatever I've learned on LinkedIn, so you can see quite a bit there. But I'm quite interested in helping other people with their success, whether they end up needing to hire somebody or not. I'm available just to bounce off ideas. So if you go to scaleupexec.com or even my LinkedIn profile, you can actually book a time directly with me. And I often find, or I often feel that once you've gained some experience or knowledge in this world, it's almost your duty to see if you can help others in their journey as well. So that's, I think, quite important for me if I can help other people in their journey, not in terms of necessarily having to hire us, but even just to bounce off ideas or to get some advice on situations that they may be going through. I'm happy to be a resource. So you can always book time with me directly through scaleupexec.com or even through my LinkedIn.
Thank you so much. This was very insightful, and I loved speaking to you, Ashish Gupta from the company
Scaleup
Scale Up Exec, Scale Up CEO of Scale Up Exec. Thank you so much.
Thank you, Zarina.
Thank you for listening to Grow and Learn. We hope that you found our podcast informative, engaging, and inspiring. Our mission is to help you keep growing and learning, and we hope that our conversations and insights have provided you with practical advice and useful perspectives. If you're looking for personalized support and guidance to help you achieve your personal or professional growth objectives, I offer a range of services to help. As a trusted management partner and mentor, I work with businesses in the process of transformation, looking for new streams of business as well as M&A. With an extensive professional network of experts and mentors, I can bring on board the right person or team based on the specific needs of the company I'm working with. To learn more about the services I offer and how I can help you achieve your goals, please visit my website at growandlearn.org. You can also reach out to me via email or social media. I'd love to hear from you. And if you enjoyed this episode of Grow and Learn, please subscribe to our podcast and leave us a review. Your feedback is important to us, and it helps us to continue to create content that is relevant and valuable to our listeners. Thanks again for listening, and we look forward to sharing more insights and perspectives with you in the future.